Welcome, everybody, to Wall Street Reporter's next Super Stock live stream, February 16th. Let me just adjust the volume here. Okay, how's it better? We are back with XTM Inc, XTMIF, over-the-counter, paid on the CSC. Marilyn Schaefer, the CEO. Marilyn, welcome back.
Thanks, Jack. It's good to be back.
So you know, XTM, of course, as we all know, is the company that's revolutionizing the fintech, the U.S. The restaurant, the hospitality market, which is really, it's $1 trillion opportunity, and of course, our goal at Wall Street Reporter's next Super Stock live stream is to bring you those stocks which have that 10x to 100x upside potential. So these are companies going after massive multi-billion-dollar market opportunities, are at a key inflection point, and with multiple catalysts in place which can ignite that massive increase in shareholder value. And we've had already in the last 18 months, 9 stocks that have increased between 10x and 50x. And we're going to find out if XTM is going to be that next 10 bagger. So Marilyn, with that said, you had some really interesting news today, which I think gives us a sense of what the possibilities are for XTM.
Yeah, it's really important news for us. We've been, looking forward to a full, robust launch in the U.S., and that's happening now. So, through a partnership arrangement, we are now launching. We're about to launch 100,000 mobile wallets, virtual debit cards, and also a portal, a place for the first bit of HR information that a person is looking for, W-2s, to be able to access that. So this is our way of really building around the whole EWA, earned wage access space that is more important than ever in the US for the service industry.
Okay, so the main takeaway, I think what investors need to know is essentially XTM is now really expanding into the U.S. market. I mean, up till now, you've been mostly in Canada, right? Doing the
Yep.
Today program, and we're going to really I'll ask you just to give a quick snapshot of what XTM does for anybody that's new. But the big news is essentially you're expanding into the U.S. And I think you're going to start off with, it's about 100,000 clients. This is to start with, right? With this partner.
Yeah, end users. Yes, we call them members. Yeah.
Okay. So 100,000 end users. What does it mean? What is this going to mean in terms of revenues? Because I think that's what investors want. That's the main thing they care about. Like, what is this going to mean, and how can they extrapolate this? Because 100,000 is only a small. This is like a very small piece of the market that you're addressing. I mean, you're addressing a mass. It's like it's like $1 trillion market in total. Restaurants, hospitality in the U.S. So the 100,000. What can this generate for XTM?
Well, let me start with the fact that you're right, Jack, there's 35 million people in the services industry. That really is our addressable market. But what this means to us is there's so many ways to slice and dice this revenue. Once you have this base, the monetization opportunities are endless. Not endless, but they're vast. And that's what, the other businesses out there that are in a similar space, but with a different approach, they've already realized this. So, the Chimes of the world and the Daves of the world, Dave Banks, and the neobanks out there, they're out doing a fantastic job acquiring members. It's an expensive proposition. We're out there and we're acquiring hundreds of thousands of users at a time. And the way to monetize that is to add features and value. So as you know, one of the big things for us is GDV, the gross dollar value that we run through our platform. And there's 2 tricks there. There's 2 really significant things there. Number 1, we need that volume up. And number 2, because we're free to the business, we need to ensure that as much of that money that's running through our platform is spent at a point of sale as possible, or either through online or in-store shopping. And we're really happy to see that in Canada, that number is growing as people trust our platform. They trust us as a business. They begin to realize that everything is flowing beautifully, that we're fully compliant. We're in Canada, we're a money services business. And as that starts to happen, they start to get more confident and they don't feel they need to move the money off of their wallet immediately. And in the US, this is our big push as well. Use this as your mobile bank account. Use it as your secondary account. And maybe for some of you who are unbanked, use it as your primary bank account. You can do everything from here that you could do with a traditional bank.
Okay. So, okay, now this is really interesting. Do you see really is XTM really a what do you call it, a neo bank essentially at this point?
Essentially, we are.
It's a neobanking platform. Okay.
Yeah.
And I think you have. Okay, so you have, I think, a U.S. Bank. You have, like, I think you had some. Was it the bank charter that you got recently or something? Or?
Right. We can't take deposits, and so our issuing bank is the Bancorp.
Okay.
One of the largest issuers in the United States, and they are incredibly innovative. They're unbelievably fantastic to work with. They're thorough. And it's taken us a while to get to where we are today, but we're happy to say we are good to go. And so that's what we're doing. So again, the challenge we have right now is not at all technical. It's sales and marketing, and it's adoption. We're putting as much money as we have into sales, into marketing, into moving as many businesses as we can into our time-saving, cost-effective, efficient platform, and then really helping them to see this as a bank account that they can trust.
Okay. So essentially, I'm curious, you mentioned like part of the market is like, people who are unbanked, or just a large percentage of the U.S. population, especially people in the restaurant hospitality industry, right? I mean, the whole business really... Yeah. Like, for example, you have, let's say, in a restaurant, you have, waiters, busboys, cooks. I mean, like a massive amount of people, right? Some of these people don't have, traditional bank accounts, right? So with essentially, you're essentially helping out this market with your system. Now, you said earlier, I think before we got on the live stream, I think you're doing right now gross dollar value, the GDV, right? The transactions going through your systems. How much per month?
So, Canada was our MVP, and we're super happy to say that we have the lion's share of the market in Canada. That's the good news. The other news is that there's been a lot of restrictions because of the pandemic, but we saw a viewpoint. We had a purview of what we could actually do in full reopenings. And for 2 weeks in December, everything was wide open, and we did 25 million in GDV for those 2 weeks. So
2 weeks, for 2 weeks.
2 weeks, 25 million. Yeah.
Okay, and this is just in Canada. So that means roughly, $50 million run rate based on...
Yeah, and those were the 2 weeks.
I'm sorry, no, excuse me. I'm looking back. $50 million a month is basically so it's $600 million a year. $600 million a year run rate is the number.
Yeah, and that was just for the 2 weeks before the holidays. So of course we were disappointed, but we see a lot of hope now with Canada's lifted a lot of the restrictions. Travel is opening up, restaurants are opening up. So we see a lot of light at the end of the tunnel for this vast foundation that we've spent a couple of years building, and now we're going to reap the rewards of all that seeding.
Okay, so I think probably one of the things that's held back the stock, and like a lot of stocks that whether it's in the restaurant, hospitality, anything to do which where COVID affected that industry. Essentially, right now we're kind of seeing the big reopening kind of really gain steam. I know in Canada, I think I know there's like a protest going on with the bridge and the truckers and all this. So I think that people are really gonna, in the next probably few weeks or a month, you're gonna have the doors completely blow wide open, because like in the U.S., like even like the most restrictive states have kind of lifted a lot of the mask mandate. All that stuff is kind of going away. So really, this I think would be a massive, massive tailwind for XTM. Okay, so back
I
to this.
agree. I agree. And I was just going to say, Jack, that honestly, I don't think without the shutdowns, I don't think we would have seen the adoption that we saw. It was quiet, there was no noise, and we were able to go to, every restaurant in Canada, essentially, especially the restaurant groups. We haven't focused as much on the smaller ones, but the restaurant groups, and we've been able to show them how they're going to save time and money. We had one of our very smart groups, restaurant groups, do their own case study to really analyze what kind of time and money they would be saving. I'm just going to reference my notes for a second, but so after they invest, for example, the time in getting the program up and going, and they even quantified that to a certain extent, they're looking at hundreds of thousands of dollars across their network, their syndicate, in savings. Well, savings, it's an ROI because it's a zero investment. They don't pay for the setup. We do all of that complimentary. And on top of that, they're saving hundreds of thousands of dollars, not to mention in the US, where earned wage access and getting paid the same day is going to incentivize and create better time and attendance for that industry, that service industry that's finding it so difficult to get people to come back to work. So there's a real advantage.
Yeah. Okay. I think before we get too deep, just for anybody that's new, just give us a quick snapshot of what XTM does, because I should have started off with that, but here we are now. So the problem that you're solving, and just explain what's the big problem you're solving for your customers with the market opportunity.
So two problems. Number one is replacing cash in an ecosystem that still relied on cash to pay out gratuities. So especially very much so in Canada, maybe a little bit less so in certain states throughout America. But in Canada, even though everyone was paying with a digital form of payment in a restaurant, they were still removing cash from a bank and stuffing envelopes and paying out their staff. We cleaned all of that up and digitized it. And our product consists of an app, a prepaid card in a MasterCard that syncs with the app, and a mobile wallet that gives you, all of your transaction records, enables you to move money, and enables you to pay bills, all of these things that you would do from a traditional bank account. In the US, the problem we solve is paying, and we're also going to solve this in Canada as well, but especially in the US, is paying out people their wages and their gratuities the same day.
Okay, so this is, again, we've talked about this before. It's a huge deal, especially in this industry. The restaurant, the hospitality, clubs, etc. industry. People want to get paid the same day, and this gives the employer a major advantage in terms of recruiting employees, which is a massive problem right now, and also retaining the employees, which is a massive problem. If somebody knows that if they work at restaurant A and they're going to get paid the same day, it's a big advantage. And let's not, I think we should also add, like, that industry is known for some of these the clients you're dealing with are mostly the sort of established large groups, right? But a lot of smaller restaurants, and I know at some point you're going to go after smaller clients, but a lot of smaller restaurants, clubs, they're sort of fly by night, financially. So maybe employees may not want to, wait 2 weeks or a week to get paid. I mean, they want to get paid today, right? So it's a serious issue.
Yeah, and we've been big game hunting for sure. Not that we would ever turn anyone away, but when you think about the time and effort it takes to convert and to acquire a customer, what makes the most sense for us is if there are thousands of employees. So that's what we've been really focusing on. And those types of organizations, having a float or being able to pre-fund the earned wage access is not an issue. So that's been really great. And and now through these partnerships we're working at, we will also be targeting QSR, quick service restaurants, as well. And you're right, there's a lot of folks in that demographic who really need to be able to deal with their lives, their emergencies, their financial obligations on a daily basis, not on a weekly or bi-weekly basis.
Yeah. So, yeah, listen, most people work in a restaurant, if they're, a lot of it is younger people, right? They don't have a lot of resources.
Yeah.
They might be going to school. They need the money now. They don't want to wait
Yeah.
whatever, they have stuff comes up. Okay, so it's a tremendous asset. Again, the total market, restaurant hospitality market it's a $1 trillion industry just in the US alone. Up till now, you've been mostly in Canada. Now you're expanding into this $1 trillion US market. But okay, so let's talk about kind of the numbers, because this is the part that everybody wants to know about. Okay, so essentially, where do you see the real money being made? Where do you see the profits being made? Is it when you talk about the GDV, which is the transactions going through your system? So you're at, let's call it $50 million a month going through your system right now. And essentially a percentage of that is sort of, you see that, in other words, you look to capture a percentage of that in terms of offering services. Let's talk about how your business model works, and especially with this partnership.
So you can count on a gross of 1.5% of the GDV moving through our platform. If that money, whatever money is being used at a point of sale, that merchant, so if you go to Walmart or you go to Target and you use any kind of card, not just ours, any kind of card at your point of sale, that merchant is paying a fee to allow a Visa, a MasterCard, an Amex, whatever the card is. They're called the network. There's a network fee. We split that. We get 1.5% of that. And we're not unlike any of the other banks that use this as part of their fundamental revenue source. But there's so many other revenue generating activities and features, benefits that we can add that include microcredit. And that is something on our roadmap for the very near future, microcredit. And what we would do, we want to help these folks avoid predatory payday loans. But sometimes you're in a bind and you need an extra $100, $150 to enable you to go into that overdraft. You would opt in and pay a couple bucks a month for that opt-in, to just give you a little bit of margin. We're adding tip pooling, which now is more of a benefit for the actual business, to be able to calculate the way they disperse and allocate the gratuities within their organization. And the big one, the elephant in the room, is payroll. So, payroll is a very complicated initiative for.
There's also liabilities. For payroll. Yeah, a lot of payments that need to go out. Yeah, so it's
and so we're working with a group that is licensed to do hospitality payroll in 50 states. This gives us a shoe-in right across the country. So as I said, our work is cut out for us: execution, sales, marketing. That's what we're really focused on right now.
Okay. But ultimately, do you see the real? Most of the profits coming from essentially as you evolve as this neobank, a lot, you're gonna have more cash is gonna stay in your system. In other words, you have this 50 million a month going through. So on average, and you're really just getting started, because there's been the COVID restrictions for the last 2 years. So in a normal situation, you might be probably at 300 million a month by now, which if we didn't lose 2 years basically. So let's say even at, let's call it and what do you see as the potential? Do you see how much, let's call it a year from now, let's say when you're operating at a little bit more at scale in the US, what do you see as the monthly GDV going through your system?
So that would be guidance. And I would have to be careful about that. But this is what I will say, Jack. There is no reason why XTM can't be $1 billion company. And our biggest challenge right now is to avoid distractions and noise of all the opportunity that we have around us. We're really focused on some key integrations right now, on rolling out properly, providing an excellent user experience, and the rest is all going to come into place. So again, there's no reason why XTM can't be $1 billion company. I really believe that.
$1 billion valuation. Valuation. Okay. And actually, I want to address some of the comps, because we talked briefly about some of the comps in your space. But let's say you were doing let's call it 50 million a month GDV just in Canada, and this was in a kind of a very quiet market. Let's say we go to 500 million once you're in the US, which is, a massive market. So 500 million a month GDV going through. You're able to capture 1.5% of that as top line, right?
Right.
Okay, so that's 7.5 million a month. So it's about 100 million a year revenues.
Mm-hmm.
Okay. By the way, this is I'm taking responsibility.
Good. My disclaimer: no forward thinking.
Yeah. This is okay. So I'm just extrapolating, and this is what it's based on. It's based on, okay, if you did 50 million, essentially a month, coming out of the pandemic when everything was closed. Now that you're entering the US, then Canada's going to go into full gear. Why not? 10x is not a big deal in terms of because again, it's the US market is 10 times bigger. You have 300 million people here. A huge amount of rest. There's much more stuff, right? So it's so I'm just 10xing that thing. You're going into a bigger market. You're just going to port that over. So let's call it 500 million a month GDV. So 7.5 million is your goes to your revenues. It's 100 million a year. What are your on that 100 million a year revenues, that what kind of margins do you have on that?
Well, your margin, I would leave that up to our CFO to talk about that, but our margins get better and better. This is a volume play. So the more people we have on our platform, the lower the cost, the cost of goods sold becomes incrementally less. So it is a volume play. That's where you start to see profit. That's where you start to see, positive EBITDA. And that's really where we're focused. Fundamentally, we are a practical business. We're not comfortable living on equity or shareholder money. Our real goal is to be profitable. So, we're very focused on not, on cost and not excessive spending. We're a team of less than 35 people.
Oh, that's a pretty tight operation. Okay, it's a very tight operation.
Yeah, they all work really hard. But everyone in the company has an option to participate in the equity of the company, and you really see it in the way they behave. Like every single person at this company puts it all out every single day. And we are hiring for sure. It's just essential. But for the most part, we could grow 10 times and only have to bring in, I'm just guessing here, but 20
There's
more
a lot of leverage. This is the beauty of the fintech business. You have massive leverage. You have really, the beauty of the financial industry is like there's big margins. It's not like you're moving, physical goods, and it's just,
That's
electrons moving in a computer, So it's very, very compelling. Now, okay, so so we talked about the GDV, right? So I'm saying you're going to have, let's say 500 million going through the system, but the real upside for you is some part of that money is going to stay in these wallets, because people are not going to withdraw at all, right? Because as they feel more comfortable with your system, they're going to keep a percentage of that in these digital wallets as an alternative to going to their bank. Because I think people these days, they're more comfortable with keeping their balances in these weird, whether it's PayPal, whatever it is, they don't withdraw it all at once. They keep it there because they figure, okay, I'm going to use it. Because at this point, I don't need a bank. If I'm using your system, I have a debit card, I have everything else. Why do I need Chase? Which charges me all these fees when I have this thing. It's very easy. So how much in assets do you think you're going to have at 500 million, GDV per month?
I knew you were going here. The reality is we are, that is money in trust. That is money in trust that we have to keep available. In fact, there's a reconciliation that goes on at the end of every single day to ensure that every dollar that is, sitting in people's wallet is there and available and liquid. So there's not much we can do with that money. That money sits there, and because we're.
I think what I was saying is, okay, so they're going to be, those assets. I mean, there's going to be, there's other services you could offer. So in other words, essentially, I'm using that kind of as maybe as a metric for other services, because I don't know if let's say you have $1 billion sitting there at any given time, there's probably, I don't know, a couple of 1% a month or more generated in different services. No?
Yeah, and you're right. There's all kinds of, once you have that kind of liquidity and that kind of volume, there's all kinds of things that you can do. And just if you do the math and you think about the fact that, we've got a pretty aggressive target in terms of number of members or cardholders that we have on by the end of this year. And I won't throw that number out there, but I will use an analogy that if you had, for example, 500,000 users, and you add a feature that costs $2 a month, that is of great value to those users, there goes your revenue, and you've 75% opt-in. You're looking at another, 750, you get what I'm talking about in terms of the volume, the multiple. And we've seen this ourselves with companies. We've watched companies in our space, and we've seen them spike. You can spike dramatically, even in the space of a quarter. And so we've done all the hard work, and there's more to do for sure, but we really do believe that we're going to start seeing the fruits of our labor.
Okay, I want to jump to some audience questions. We have some good questions I want to get to. I want to ask you one last question here, which is, okay, so let's talk about some of the comps. Before we started the call, I think we were talking about, okay, so you're going to have 100,000 clients on this, in the U.S. platform right now. So with the debit card and everything else in the U.S. market. And I was asking, how do we value this? And you mentioned a comp. So can you share that with our audience?
For sure. So there's some very frothy valuations going on, especially with the private companies in our space. So for example, we will be approaching 100,000, 200,000 users, and you can easily see what our valuation is. Others with maybe 400,000 users are looking at $1 billion valuation. So certainly there's some disparity right now between where we're at. We've been asked, why did we go public as soon as we did, and et cetera. The reality in Canada is we had an opportunity that we wanted to seize, and we wanted to move quickly, and it can take a lot of time to raise money if you don't have an imminent liquidity event. So we went public as a very small company, and we worked ourselves through the ranks, and we feel like we are now coming of age.
It's kind of, I mean, for you to go public early, because again, in the US, you'd still be a private company with maybe a 500 million valuation. Right. So it might be bad for XTM, but it's good for investors at this point.
It is good for investors.
It's investors are basically stealing the company here at this valuation. How many shares outstanding do you have right now, like fully diluted? Would you?
160 million, 160, somewhere around that point.
Okay, so the market cap is, I don't know, what is it, 50 million, whatever US, 50 million US, and really it should be, based on the comp you just mentioned, 250, it should be 5x that. So, because if this other company, can you mention the company? You said that they have 400,000 users, they're at $1 billion private valuation.
Yeah.
Can you share their name?
I won't. I won't share their name. And there's lots of examples like that.
Okay.
It wouldn't.
I mean, there's a million of these guys, but it's like I'm sure people can figure out who it is.
Yeah.
It's not like unusual in the fintech space. But okay, so if they're at a billion valuation with 400,000 users, and you have 100,000 users, I mean, if I do the math, that puts you at a 250 million valuation as a private company, essentially. And so there's really a 5x upside from here. This is what I see as, this kind of, there's a built-in catalyst right now for investors in XTM, like looking at the stock, this is like one of the catalysts. You have this you have this upside in valuation, just as kind of the market gets to know the company better. There's more awareness. People are going to start valuing XTM as typical fintech stock, and there's so many of them that are trading at crazy multiples, whether it's, I don't know, SoFi or we can go through the whole list. It's a crazy market.
And I think it'll just take the investors. They need to feel confident with our trajectory, and I think that we're coming around to that. Certainly, the finance community is, and we're relaxed. We're in a good spot. We've got cash in our account. We've got lots of opportunity around us, so we're feeling pretty confident.
Okay, and you guys raised money just a couple months back. So you have how much cash, a ballpark you have?
We've got about $8+ million sitting on hand. Yeah.
Okay, so you're in a good position. There's no need for any additional raise. Okay, so in terms of I just touched on some of the other players in the fintech space with massive valuations, which kind of leads me to think at some point XTM. I mean, it could be it could be a very compelling target for one of these guys. Why wouldn't they pay $300 million for the company, whatever the number is, or maybe you could do your own M&A, buy other companies, as your market cap increases in the space.
Yeah, and we're not sitting here, on our hands. We are moving aggressively forward. We want to do right by our shareholders and by the group that have got us to where we are today. But I will say this, that we are very ambitious about what we own in the ecosystem of the hospitality space. And we feel it's very important for us to be able to provide a holistic solution so that the restaurants and the businesses out there in the hospitality space can focus on what they do best, which is delighting a customer, with a fantastic meal and a fantastic experience, while we take care of the back office for them. The accounting, the bookkeeping, the payroll, the gratuity payout, attracting and retaining employees, all of that stuff, that is not part of their core competency. That's the part we want to take care of.
Yeah, no, it's a very valuable service. Okay, let's get to some audience questions. Andre Philippe, I think he was on the last live stream, asking a lot of questions, so he's a good Q&A here. Hi, Marilyn. Congratulations on the latest news. Is there a way for you to give us more information on who this new client is? What umbrella are these 100,000 users under? I guess he's asking, who is this partner?
Yeah, who's the partner? And so, Andre Philippe, we will reserve that information. It's actually in all our best interest to reserve that information for a couple of weeks, just for competitive reasons. But we will absolutely disclose the name of that partner in due course, very shortly.
Okay. Now you have a debit card as part of the platform. I guess Jonathan's asking, what are the fees, interest rates? Is it like in line with the market, or what?
No, because it's a prepaid card. There's a debit card, so it's your money that sits on the card. So there's no fees or interest rate associated.
Okay. What else? What other kind of news flow can we expect, let's say, from XTM in the next 30 days or so?
New clients, new partners, maybe a little bit more specific about new partners. And part of our challenge is that because we are viewed as a competitive edge for many large restaurant groups, is sometimes they don't want to announce it. So we're working on that to enable that kind of disclosure.
Okay, so bottom line is a new, sort of a new service added to the platform, so there's some great catalysts for an increase in value here, based on the comps we talked about.
Yes.
Fantastic. Okay, Marilyn, I want to thank you, and we look forward to more great news, more developments from XTM in the coming weeks.
Awesome. Thanks, Jack.
Thank you. Okay, here we go. Conrad.
Hello.
Hang on a second. Let me get you set up here. Okay. Let me just get this up.
Looking sharp, Jack.
Yeah. Where is your tie? I mean, what happened? What is this business casual today?
You're setting a new standard here.
All right, hang on. Let me just get adjusted. So we're at the same height. Okay, CEO. Okay. 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 So before we get started, let me just pull up the notes. And we're gonna talk. I want to talk about some of the comps today, the M&A comps.
Well, it's the perfect time. The biggest deals in the history of the industry just happened. So,
okay, hang on 1 second. Okay. 1 second. Okay. Conrad, you ready? I'm going to do a quick intro and we'll get started.
let's rock and roll.
Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, February 16th, 2022. We are back with ESE Entertainment, ENTEF over the counter, ESE on the TSX. Conrad Vasela, the CEO. And of course, as many of you know, and we'll find out later, ESE is one of the fastest growing companies in the multi-billion-dollar global esports market. By fastest growing, we're talking about, I think it's like a 50x or 60x increase in revenues. Last year, ESE was at like $1 million run rate when you first came on our platform. Right now, you're at like 50 million plus run rate with some of the acquisitions, and this has all been done through an M&A roll-up of companies in the esports infrastructure space. The good news is, so you just closed your latest, officially closed. GameAddict officially closed.
Yep.
On the books.
That's why I'm smiling, because as of February 1st, Q2, all the revenues from GameAddict are now going to be on the ESE financials. So get ready for Q2, everyone. It's going to be really exciting. That's the whole group. All our assets will be on those financials.
In Q2.
What's that?
In Q2.
Q2.
Okay, because this is okay. So this is interesting. We'll talk about some of the news and all that, but we should start off with, I think one of the reasons why the stock is still very cheap right now compared to the comps, because again, the comps in your space, based on pure valuations, the stock should be trading at $10 based on just 10x revenues, right? Based on what your competitors are trading at in the private markets. I mean, we just had a company on earlier. They have a peer that's a private company, a VC backed company, trading at $1 billion valuation, and so this is it's a really exciting opportunity. So one of the reasons why I believe ESE is still a very cheap here, like what is it? We're $1.20, $1.30 Canadian, is that you've done a whole bunch of acquisitions in the last 5 months, or between July. Digital Motorsports, GameAddict, Frenzy, all those. I think there's another one maybe. Did I miss anything?
No. I mean, it's been just a supersonic 12 months, but the last 6 months have been kind of packed together.
Yeah,
right?
So I think what people are missing is a lot of the revenues from those deals is still they're not being fully reported yet, because you only, I think the last quarter financials, you only had like a month of Digital Motorsports, or you had now you're going to have at some point, so the second quarter of 2022, you're going to show a full quarter.
And not just that, you'll see, this is the exciting part, is we can't discount organic growth and how well we're doing aside from the acquisitions. So you're going to see the audited financials come out. We anticipate them to be very strong. Then you're going to see Q1 with almost all the groups involved, and then like you said, Q2, you'll see the whole picture. But you'll see the trajectory and how it looks, and I mean, it'll all make sense for you. That's the whole point, right? As to your point, you can't put any of those revenues on your books until it's formally closed. So that means approved, legally approved by the TSX, approved by everyone. So now that we're formally closed, we could put those revenues onto our books. So it's going to be an exciting, not just Q2, it's going to be exciting year end, Q1 and Q2. And then we could really show you guys what we're doing organically on top of that. So be prepared for an exciting next couple of months.
Yeah. So it's not just, I think, and we have some great questions coming in I want to get into, which kind of touch on this point here, is that it's not just, you're not just doing a roll-up of just random companies. There's actually synergies here, which we're already seeing where you're getting this organic growth. But okay, so Q2 is, people are actually going to see for the first time what you've been working on. They're going to actually see the fruits. They're going to see a full quarter of revenues from all these groups.
And the cool thing is Q2, you're going to see what we were up to, the last, call it 12 months, right? All the energy, all the interviews that we spoke about, acquiring these groups, like you said, the synergies, you're going to see them all come together. That was a great quote, by the way.
You're not running for politics yet. Okay, we'll get to the questions in a bit.
So you'll see what we've been up to, and it's going to be right in your face with real numbers, hard numbers. There's nowhere to hide. I'm going to be on the show again with a smile on my face. I can guarantee you that. And then we're going to start showing the organic growth. And guess what? Future acquisitions. The pipeline has completely shifted. The M&A pipeline has completely shifted. We were focusing on, grabbing these groups that were synergistic in our ecosystem, and we were putting in a ton of work. It's completely shifted now where very significant, larger groups are now reaching out to us. So that shift has happened, and our pipeline literally is growing on a monthly basis of guys now calling us saying, wow, you guys have really put something special together. Can I be a part of this? So the whole dialogue has shifted, and it's you have to give the whole team a pat on the back because it's the hard work they put in. And like I said, over the next few months, numbers don't lie. So it's going to be an exciting next couple of months.
Okay, so I mean, it's going to be very interesting. So in the second quarter, in theory, I'm thinking you're going to be showing something like 10 million in revenues based on 10 million plus. No?
Yeah, you'll have to wait and see. But okay, like I said, we anticipate some significant organic growth as well.
Okay, so and that's going to be so essentially that's going to be a massive increase over Q2 of last year. I mean, it's going to be like a I don't know, what is that, 40x? I don't know, crazy. It's going to be a crazy number.
And this is what I love about it, because now I don't need to speak on it. It's just straight facts. Numbers don't lie. You're going to see the numbers. They're going to be released to the public. And I'm just going to wait for the numbers to come out. I don't need to speak about it because they're coming, and they're coming in a hurry. Our year end is going to come up at the end of the month. Those are audited. Our Q1s are going to come in a lot faster because they're not audited. And then you're into Q2, right? So it's going to come really fast. Because we have an October 31st year end. So our Q1s are actually January 31st.
Okay.
Q1s.
So the Q2, okay, so when are these Q2 numbers coming out?
So that's February, March, April, May, end of May.
May. Okay. Okay. So we got to wait 3 months roughly here.
Yeah, but I think
it'll be worth it.
I think you'll get the gist after the Q1s.
Okay. Okay. So yeah, I mean, yeah. So bottom line is, I mean, it's almost like it's like a python that swallows an elephant. It takes a while until it shows up, right, to digest, etc. So I mean, last year, there's a massive increase in revenues, and I think people don't quite realize the market hasn't caught on to it. We've been in a bear market for innovation stocks in the last year. I mean, there's no question that that's really been kind of like a wet blanket, kind of keeping valuations down. But although that being said, ESE is still now you're still 4x above where you were when you launched, right? So it's still a big, a very compelling thing. So I think people they're gonna
And
be looking forward to Q2.
and the best part about this, Jack, is these type of markets, the cream rises to the top in these type of markets. Groups that have a really tight structure like we do, groups that are fundamentally sound like we are, these are the types of groups that really accelerate and separate from the rest. Groups that aren't run properly and aren't tight, generally speaking, have significantly harder times in these types of markets, where I think we're primed and we're going to have a lot of eyeballs on us because we're delivering over and over and over again. We're going to be a broken record for the rest of the year, delivering, both organic and on our M&A trail. So that's why I always want to highlight, follow the news. I mean, the stuff that we're doing on the organic side should be celebrated. It's very impressive. We announced the new studio, so maybe it doesn't sound. Yeah.
I want to ask you. I have a bunch of things I want to ask you about some of the recent news flow, right? But I want to actually first jump into some of the market comps, because I think it's important to kind of people to understand what the value of what you have is, and then we can kind of get into some of the recent developments, and then I want to open up for the questions. We've got a bunch of questions here, so because I think the comps are incredible in the space.
I mean, it's unbelievable. I mean,
okay.
What a time! Yeah.
Do you want to talk about this? There's a bunch of deals recently that have happened. There's a bunch of transactions. I think was the Saudi government investment fund, right? It's like the sovereign. I think it's their sovereign wealth fund. They just bought 2 esports companies for like $1.5 billion last month.
Yeah, US dollars.
Okay.
And this is one of our competitors. We have people in our group at ESE that used to work for ESL, the group that got acquired, senior people. It's one of our competitors, and they set a standard, 1.5 billion US.
That's ESL. I think the other one was a Faceit, right?
ESL Faceit group. And it just shows you again what a time to be in esports and gaming. You see Microsoft come out, biggest acquisition in history, all of technology history, almost 70 billion. ESL gets acquired for 1.5 billion. Sony has been on an absolute terror. They've done over 5 acquisitions in the past 12 months to keep up with the rest of the groups. Do you see a common theme? We're following a similar path as the big guys. We're also consolidating. So what we've been doing over the past 12 months is not only the right path for us, but it's clearly the path that the whole industry is taking, being led by the biggest groups, right? So
these guys, these 2 companies that they were bought for like $1.5 billion. I mean, I think one was $1 billion, the other one was $500 million. What kind of revenues were they doing? Like, what were the valuations there?
So nothing's been officially released, but from what we have gathered internally, it's looking like anywhere from 8 to 12x revenue multiple. So that kind of gives you once again an idea of where we stand as a company and where the industry stands. And that's pretty consistent with some of the bigger comps around the globe listed in NASDAQ, TSX, or on the London Exchange. Some of the bigger comps, it's like an 8 to 12 range revenue multiple. So it puts us in a very unique position.
Okay, and you have also what is it? The FaZe Clan SPAC. When is that? Did that come out yet, or when is it coming out? I think that's also like 500 million. It's like a 10x.
They want to do a $1 billion IPO, right? On a 10x revenue as well. So
okay,
it shows you. I mean, these are now factual numbers. That's what I like about what's happening in the industry. I spoke about this 12 months ago with you. It's happening now. These are all facts. Google it, read it for yourself. It's public knowledge. Read it for yourself. So the question you have to ask yourself is, where does that position us? We position ourselves perfectly. And I think we put in all the right work, done the right acquisitions, and now we're in a unique position. We've consolidated a nice chunk of the market, and we're going to continue to do it.
Okay, so basically, there's so many comps of these esports companies, whether they're kind of in the infrastructure space or, again, I think the Saudi deal for $1.5 billion, I think they organize esports tournaments, right? Essentially,
Yeah,
those two companies. Yep. Okay, so those are 10x, right? And you're at 50 million, 60 million run rate, right? Let's just say 50 million. So in theory, right now, ESE should be trading at 500 million valuation, right? I mean, that's based on those numbers.
I mean, just by, I can't give guidance, but based on what's publicly known about the other groups, what they're receiving, the multiples they're receiving, that's what everyone else is getting on the market.
Yeah.
For some reason, we're tailing behind. We're 1.5 times multiple, which is
let's do the math.
Right?
Let's do the math. Right now, there's how many shares out fully diluted?
Just under 70 million.
Okay, so that's is that $8? So it should be worth what? $8 plus a share, based on that. $8 plus right now. I mean, the stock should be trading at $8 purely based on not going forward, just based on his last year. Essentially last year's numbers. So it's an incredible. This is the thing. Like right now, I think it's the best opportunities are always present themselves like in the bear market, because it's sort of like that's when you make the money, is not when things like last March when everything was going crazy, but right now when every stock has been just like really whacked. Like if you look at all the Cathie Woods, the ARK index stock, I mean off 50-70%. So I mean right now somebody essentially is able to steal the company. They're stealing ESE at $1.30 when it's worth $8 plus based on last year's numbers. And you still, and again, I think what's also missing here is that these 10x numbers, your comps, those companies are not growing 50x. I mean, they're
definitely not.
They're growing.
They're definitely not.
Yeah. So it's easily this should be $10, $12 stock, but that's let kind of people decide for themselves. Hey, let's get to some audience questions first, and I want to jump into audience questions, and then I'll ask you a couple more here. Okay, so hang on. Okay. Nicholas is asking, this is a very important question. Conrad, can you explain how WPG, DM, Frenzy, Game Addict synergize together? All the acquisitions you've made. I understand, but many seem to keep wanting an explanation of how they help each other.
Okay, great. Let's use a real example. Okay, let's use the Digital Motorsports World Cup example. So Digital Motorsports World Cup was an international event that was held in the Frenzy studio. It was produced by Frenzy. Digital Motorsports obviously provided the simulators, their expertise, their sim racing specific expertise. WPG helped on fan retention and customer service. And then now the last layer is Game Addict can now help with user acquisition. So drawing more people, more viewers to not only watch the Esports World Cup, Digital Motorsports World Cup, but also drawing more users to the e-commerce site. So that's an exact example of a full circle of how an event would work. So it's very seamless, and they all work together, just boom, 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 boom. And they all add value. They all bring new users, add support. And most importantly, it's all tier one across the board. So from a production standpoint, all the way down to customer service, it's all provided internally.
Okay. The Game Addict acquisition was just closed. Just give a quick recap, the numbers, and before you answer this question, just give us the numbers.
Guys, do you see why I'm smiling? This is not just 24 million of revenue. There's almost 5 million of profit. Okay. This puts the entire group into a position to be profitable. And how does it allow us to enter into iGaming? Because we could use the same user acquisition technology that we have internally to now reach out to some of my personal iGaming contacts and iGaming companies in general, and ask them if they want these same user acquisition tools to be used for their company. So there's a massive revenue opportunity. But the best part is we're going to sidestep any regulatory issues that come along with iGaming so we could get the benefit of the revenue and profit, but not get bogged down by regulation.
Okay. And I think, okay, so just for anybody that doesn't know, Gameatic, explain their business. What do they do in terms of who some of their customers, and how this can be leveraged into the iGaming space? Because I mean, we're seeing huge numbers in iGaming, being spent on, like in the Super Bowl. These companies are spending billions a year on customer acquisition, billions, $1,000 per user or more to acquire users, and you're doing exactly the same thing in the esports space. So it's very easy to port this over to, but just you maybe you can explain.
Yeah, very simply, guys. Gameatic's tech team has developed their own, technologies and IP internally to best acquire new users in the gaming sector. So they have over 30 million active users, gaming specific users a month. That's very important. Gaming specific users. So they have the ability to retain very sticky customers for big companies like, for example, Full Tilt Poker, PokerStars, all the big iGaming companies. So if we reach out to them and we could acquire more new users for them, this is exactly what they're looking for. So, for example, on the gaming side, they've previously worked with groups like Roblox and brought millions of new active users to their platform, to their game. So this is exactly what the publishers and these companies are looking for. That's how they monetize. They want new users, and we're going to provide that for them. So it's a tremendous tool that we have in our ecosystem that's going to drive new users. And it's great. Like I said, 30 million active users a month. We want to drive that to 50, 100, 200 million. We really want to scale that. And these are some of the organic metrics that I'm personally excited to see over the next 12 months. How big can we get that side of the business, right? And this whole ecosystem now turning, working together, how big can we get this thing? And from what I've seen so far, it's heading in a very positive direction.
Okay. So speaking of organic growth, I mean, again, it's this is not just the M&A roll-up story. There's actual synergies, there's actual organic growth. Now, the other day you announced that you're expanding the European media operations, the Frenzy studio.
Yeah.
Maybe you can answer this question. So Cole is asking, can you touch on the expected growth going to come out of the Frenzy with the additional studio, and maybe kind of what kind of revenues that this Frenzy generating?
Yeah, I mean, guys, like I said, you have to be pragmatic. Read the news releases. Last year we had one studio, and then within the past 6 months, we've expanded to 2 studios. It might not sound like a lot, but we just doubled in size. So now we could bring on double the amount of customers. We've expanded into 20 new countries, right? So now we're rolling out in 20 new countries. From previous years, we're talking 10, 15x growth from, simultaneous broadcasting, simultaneous streaming in multiple countries. So you have to really read into these news releases and read it line for line. And we try to put as much detail as possible. But, this type of organic growth is very significant. You're doubling in size. Now you're doing simultaneous broadcasts. You're in 20 plus countries. This is massive.
Which
you have to
countries?
really.
So which countries are you in right now?
So this is mostly right now, predominantly in Europe. So once again, in the news release, all the countries are listed, and that's the stuff that I want people to look into, right? We're in Poland, Greece, Switzerland, all over Europe with exclusive contracts, multiple languages. This just expands our general business model so significantly, and I just don't think people are catching on to it. But that's the beautiful thing about numbers.
Right.
Everyone knows how to read numbers, so we'll let the numbers speak for themselves. But
I think this is, I think, okay, so I think really this is like the big kind of built-in catalyst right now. It's this the Q2 numbers, which are going to show everything that you've been talking about and working on for the last year. I mean, people have seen the press releases, but the financial, I mean, your reporting, official reporting has not caught up to the work that you've actually done. So it's already, you've done the, I mean, these numbers that you're going to show, that's already, they're going to be 4 months old by the time they come out. Or three, was that 3 to 4 months old?
Yeah, and by the time those come out, we're going to be working on 10 other new projects and working on other acquisitions.
I think once people see this, they see like a number like 10 million revenue for a quarter. That's going to be a game changer, because by then they're going to realize, oh, this is for real. It's not just, they're going to see, oh, this is actually making sense. This is not just, some crazy talk or whatever. They're going to see, M&A, organic growth. Everything is going to start to make sense. It's almost like, when you came on the platform last year, really the company was kind of like brand new. I mean, you were only public at that point for like what, 6 months or so, I think, or 5 months.
Yeah.
I mean, so it's sort of like, really, this is like people, like they're really, that was almost like like a legitimately ground floor, like basement, and people were able to get on the ground floor. Now, it's the elevator has been going up. So,
and this is, once again, read the news. I put out a business kind of outlook for 2021. I put out a business outlook for 2022. And tell me if I've ticked off those boxes, because I've checked, I have. And we're into 2022, and I've already ticked off several of the boxes for 2022. And we're 1 month in. I said we're going to be expanding into North America aggressively. Guess what? We have $24 million of revenue and $5 million of profit to support that. We're expanding, and we're doing it now. Read the outlook for 2022. We're doing it. We're not putting these out for fun. We're executing on those plans. And that's what's separating us from other groups. Jack keeps referring to us coming on early a year ago. Maybe rewatch some of those interviews, because we're doing every single thing.
I highly recommend people watch them, and they're all on our channel, starting with, I think, when did you come on? November of 2020, I think, 21 or December. It was like early December or late November of last year. So 13 months ago. All the videos are there. Everything you've said,
and it's the same. It's the same theme every time. I'm a broken record. I talk about the same core, 4 or 5 core things, and we continue to execute every single time. I'm on the show very consistently. I'm not shying away, whether the market's high or low. It doesn't matter. Our business is heading in one direction, and one direction only.
Let's get to some more questions. I think you touched on this. Samantha, she's got a couple of questions here. Revenues from the ESE New European Broadcast. Okay. Did you talk about? Did I ask you this? The revenues they're going to be coming
so we literally just launched the new studio this month. We're doing 20 new countries. So once again, we have an idea of where revenues can take us. However, you have to give us some time to get sponsorship and advertising in the door, and see kind of what type of numbers that new studio could generate for us. But that's the exciting part. We're getting paid and we're making a margin on it already. But the question is, how much additional sponsorship and advertising can we get from these 20 new countries? This is the exciting kind of cherry on top of the cake opportunity. And once again, you won't see that for a month or two because that's how the business works. And I prefer not to give guidance on something like that because, like I said, you're going to see it in the numbers.
Okay. Next question is, can you give an update on eNASCAR sponsorships for the company?
Yeah, no, eNASCAR has been great so far. We just did a really cool sim racing giveaway with Digital Motorsports with them. That whole series is up and running. I actually have a trip lined up in the next 30 days to go meet some of the senior people at NASCAR to see how we could accelerate that relationship, really scale, and kind of really understand how do we take things to the next level. So we're really in tune and on top of all our clients. And all we want to do is go back to them and how do we scale? How do we work together to get bigger? How can we do more? And it's working because a lot of these big publishers and big companies are coming back to us and signing multi-year deals. So I really want to do the same with eNASCAR and drive that whole side of the business.
Okay, so Nicholas is asking, okay, so we know, okay, Game Addict did 24 million in 2020, WPG 14 million. Can you remind us about Digital Motorsports and Frenzy's 2020 revenues? I remember you saying roughly 5 million apiece.
Correct. You're going to see the numbers very soon within the next few months, but the rough historical revenue is around 5 million.
Okay. Okay, so, okay, in a sense, Frenzy better. Any thoughts on advertising with Formula One?
Yeah, this has been a huge topic recently. I saw this morning I'm sure you're referring to the big crypto investment. Crypto.com did Formula One as a whole group. And then there's another crypto company that sponsored an actual team separately. But I can't remember the user's name, but great question. And trust me, we're all over that. And I think, you'll probably see something in the coming months relating to that topic. So we're definitely on top of that. And there's a lot of money pouring in. We're talking hundreds of millions of dollars into that space, advertising and sponsorship, and we want a piece of it.
Okay. I guess a question or comment. No more capital raises until we get to a higher price. So do you have any plans to do a raise at these levels, or what price would it have to be before you consider a raise?
Yeah, we're in a very solid spot. We don't feel like an equity raise makes any sense for us at the moment. If we considered any type of raise, it would just be strategic capital, and it'd be some small debt that we could service because now we're profitable and we have revenues coming in and profits coming in. So an equity raise just wouldn't be fair to the shareholders right now. And it's something, it just doesn't make any sense. I mean, we just talked about it for the past half an hour about, the multiples out there and comparables. So we're more than happy if we need a little bit of cash for growth to help continue to drive the business, take a little bit of debt financing. But as it pertains to equity raises, which is the type of raise that would put pressure on the stock, we're not going to be doing that.
Okay. So what about let's kind of talk about some of the internal growth things happening. Recently, you kind of announced your initiative into the metaverse. Let's give us the metaverse update.
Well, it was amazing. I don't think a lot of companies could say this, but we opened up our metaverse business unit and we already signed a contract, and we're generating not only revenues but profits. So we signed with a group called Skin Wallet, who specializes in NFTs and skins, and are really entrenched in the metaverse ecosystem. So we're working alongside them, and we're actually working on some really cool projects coming up here in the next few months. So, like I said, keep reading the news because we're going to be I mean, it's just going to keep coming, guys. You see the pace that I'm putting out news, whether it's metaverse or just our daily business. Quality news is not going to stop. And metaverse is definitely one of the ones that we're not going to stop. We're just going to keep building, but the right way. We're going to start bringing in revenue from metaverse, which is fantastic.
So the deal with Skin Wallet, like what kind of revenues, what can you expect to generate from that?
You know, we
I know
can't
it's
get
very
into
early stage. I don't know if it's like, can you even project?
We can't get into details of numbers, but it's actually significant enough to really focus on this segment. And I think that there's millions of dollars to be made in this segment. So it's something we're definitely going to be pursuing.
Here's a great question. Okay, so what kind of acquisitions are you looking at in 2022, if any? If any, I mean, if any, if any. But yeah, so what's different? What are you doing different? What's the strategy for 22 for this year as opposed to what you were doing last year?
The strategy has shifted just a little bit. Like I said, it's shifted too, right? Now we're a bigger group, right? With an anticipated 50+ million run rate. So now we could go out and pursue bigger acquisitions. So groups in the range of 30 to 50 million as well, or higher. And as we continue to grow, we could increase that as well. But we are hyper focused on just more synergistic bolt-on type groups, because we have a very clear path when we sit down with our team. Everybody knows our strengths. Our strengths are on the tech side with Game Addict, and the production side with Frenzy. And we really want to just start bringing some more into those two groups. And trust me, they also have targets in mind, groups that they work with, partnerships. It's really...
I think we froze. Conrad, are you there? Conrad?
Yeah, I'm here.
Conrad, I think we just I think your internet froze for a second. Are you there?
Yeah, I'm here.
Okay. The last thing you were just saying, it cut out.
Yeah, you could probably see it on my face, but we're just in such a unique position now where we kind of have the pick of the litter, and groups want to work with us. So when we do announce something this year, it's going to be very exciting, and it's just going to take us to the next level. I know we're at the next level. This is phase 2. So last year was phase 1, hyper growth. This is phase 2. We have a rock solid foundation, big revenues, profitability around the corner. This is phase 2, man. And we're just fired up, and we're going to do some really special stuff this year.
Okay. So now if anybody has been kind of tracking, I mean, the acquisitions, they've been kind of getting bigger in size. I mean, the latest one is, it's a $25 million company, 25 million revenues. Can we expect to see deals continue on that scale or bigger?
Yeah, and that's the thing, right? The conversations have shifted, and bigger opportunities are coming up. So yes, absolutely. And the pipeline is, it's not 100 million anymore. I'll tell you that much. It's much larger. I mean, it's completely shifted. We have groups calling us now.
Okay, because just for anybody that's new to the story, last year you came on and you said, hey, our M&A pipeline is 100 million. This was last January, I think, when you said that. And sure enough, you did basically 50 million in revenue acquisitions, of 50 million of revenues. So now I think you mentioned 250 is the new target. I mean, like your M&A pipeline, is it like what in terms of, if you added up, all the numbers, like what's the size of the pipeline right now in terms of revenues, the deals you're looking at?
Like I said, it's just so robust and it's accelerated. Our team's done a fantastic job, but it's in the several hundred million range. There's groups that are 50 to 75 million on a standalone.
So you're kind of going after, I mean, these are the significant companies now. You're going after $50 million type deals now.
It's once again, watch the old videos. We're going for $1 billion plus market cap, 100 plus million revenues, and we're going to take it step by step. We're going to get there, and then that's how you continue to build. But the targets are very significant now. And, these are the types of conversations we want to be in. We're surrounding ourselves by multi-billion-dollar groups. So we have to start thinking like this.
Okay, excellent. All right, Conrad, on that note, let's wrap up here. What other, what kind of news flow can we expect next 30 days or so? What should people, let's maybe let's say 45 days. What can investors look forward to?
Well, I think I might have spoiled you guys a little bit because I'm not getting the reaction I want. But guys, it is consistent. It is high quality news nonstop. And guess what? I don't care if people don't react. I'm going to keep pounding the news week after week, multiple releases every week until the wheels fall off. I mean, I'm just going to keep pounding. And that's how I operate. I'm going to be a broken record. And at the end of the day, numbers don't lie. So when they come out, we'll be on again, and I'll continue to have a smile on my face.
I want to end with this comment here. So basically the stock has essentially been very, very de-risked compared to where it was last year. I mean, and again, the stock ran up to as 450, went to 450 before you even had any real numbers. I mean, you only had you're only doing like 15 million run rate at that point. Now you're at 50 million and you're at 75% off. It's on. So it's
unbelievable.
It's fascinating how markets are. So yeah, definitely. I think, but at some point, I think people are going to start waking up here from the slumber. These bear markets, they don't last.
And go do your research. I mean, go do your research. Go find another group that's profitable in the sector, and go find another group that has these types of multiples.
I think definitely people should do their research in terms of the comps in the space. There's been a number of significant, landmark transactions. Other esports companies. We just mentioned the Saudi deal for these two deals, which are $1.5 billion. I think you mentioned like something like 10-8, between 8 and 12x was the multiple. So it's a really the
information's out there, right?
The information is out there. It's amazing. Okay, Conrad, on that note, I want to thank you, and we look forward to more great developments from ESE in the coming. I don't even want to say weeks ahead. I want to say in the hours ahead. It's already 2:30. So.
Oh yeah, we're gonna be grinding, man. 24/7, 365.
Thank you, and thank you everybody for joining our live stream. We will see you all on the next one.
Thanks, everyone.